Good afternoon, Scott Redler, T3 Live. Welcome to Friday's recap. Yes, I made it through the Friday. If you're watching this, you made it through a long week. A week that was packed with action, packed with headlines, packed with setups. And a lot of people took advantage of them. A lot of people rotated around, traded different sectors, got long, used a tier system, went from the financials to some high beta tech to some refiners to the S&Ps themselves, and literally there was a lot of action for every different type of investor. There was a lot going on. People who wanted to, be long TBT and short TLT, that trade worked out for you. You had Apple touch $600. You had JP Morgan go to new move highs. You had some retail stocks on the move with some coffee stocks and some casino stocks. So, there's a small group of people out there that are really just negative and really just miserable, and I still don't understand why. I know that everything that Washington does or Europe does policy-wise may not be the smartest, or maybe there are definitely more problems out there, and when they come home to roost, the market will let us know. But at this particular point, technically, the market has been trading very, very well, from leaders to laggards to setups. So there's a lot to be thankful for and a lot to be happy about if you're not using opinions and you're using strategies, skill set, discipline, and you're educating yourself. If you take a quick look here at the S&P, you'll see, as far as a macro investor, since that low here back on October 4th, this outside day, this red dog reversal, it really has acted pretty perfectly using most different characteristics, except for obviously volume's been light, but it's been light for years. Here's the low, another higher low, not even tested. So if you're a macro investor, you're investing, you're doing well, you don't even really care. As a momentum trader, which is what I consider myself, or someone who follows a little bit more short-term trends, for me, I was able to hold probably a nice 15 positions or 10 to 17 positions, depending where it was, from this descending channel break back on December 20th, and that's when IBD put us back in a confirmed rally all the way through. This is like 2 months worth of action where you could have been long really good stocks, showing relative strength, breaking out of patterns before, this little break right here. This was about 2 weeks ago. We broke below the 10-day, and then this is what happened. That's it. That was the correction. That was 1340. When we did correct, there was a lot of ways to maneuver it, and some did the right thing. Some actually were a little upset with themselves. Some fought. You had to really think about where you are in that spectrum. For me, I got flat into that break. I actually was net short for that Tuesday, and on that day I covered, and for the first 2 days I had no positions on. I wasn't sure what the market was going to do. Any technician out there, or even short-term trader, you had to be like, okay, let me see what the market's going to do here, and let me see if I could either re-short a retest of that broken trend line, or do we just continue higher, and will there be signs showing us that that was the correction? We get to move forward and put positions back on. You're allowed to. If you're a macro investor and you stayed the course, you went to tier 1 on that breakdown, there were ways to get back to tier 2, tier 3. And if you were a momentum trader like myself that got flat or net short, there was a way to re-enter the market and say, okay, I just saw what happened. The market just proved we can continue. Let's get back to work here and get going. So if you go back to the chart of the S&P, you'll see that was right here. I remember this snapback. I remember saying, you know what? This is the easy bounce, but if the bears have any control, they probably don't let it get back above, I think I was talking 1358 then, and we opened up like 1363. So on this 2-day move, I said to myself, you know what? That could have been it. At the same time there, after this 2-day move, which you'll get a little bit closer to just check it out. Let's go this way. After this 2-day move, you had to say to yourself, it just negated the power of that 1 day. It didn't. If it would have been held here, like just say this was it, you would have said, okay, this controlling move still has power, probably goes lower, maybe we test the 1320. Didn't happen. We went halfway, closed, you had to be on a little alert, and then once it powered through and even closed above this high, that's when you had to get out of your shorts and say, let me see a little bit more data before I start repositioning. So after this day, that's when you really had to get out of your shorts and get rid of your opinions and stop being damn stubborn. And then here were your 2 days to start testing out new positions. In these 2 days is where I went back from, pretty much flat day trading to holding 5, 7, 8, 9, 10 positions, because I said, you know what? We didn't really pull in at all. We're hovering by the old highs. The retailers breaking out, okay? Come back to me. You had retailers breaking out at the time. You had home builders breaking out at the time. You had leadership in the Qs. They continued. You had Apple going nuts. So right there, that'll tell you that maybe that was it. So at least cover your damn shorts. At least get short off the brain and stop having an opinion. So if you didn't want to put on too much risk, fine. At that point, though, is when you start to put things back on, whether it was IBM, VMW, Bank of America, JP Morgan, a lot of things that were looking good to put back on. LinkedIn, Dunkin' Donuts, LVS, a lot of those stocks that were strong, we're telling you, you know what? We're consolidating, we're going higher. And that's what you start to see on my disclosures. And I have disclosures on my virtual trade floor so you can see what I'm long, so it can give you confidence to join along the ride. And I try and teach you why, so you have conviction to stay with it instead of just piggybacking on what you see from the virtual trade floor. So anyway, you go back here and on these 2 days you start developing some positions, and then you had your nice breakout right here, right? This was that pivot high, this was the outside day, and even there, here was your outside day. Remember that day? We said maybe we get a 30 handle pull-in, similar to what this outside day was when it crossed above and you had like a 30 handle move lower. That's all you got. You did get from this high here, let's get my little Quotron here. You had your high on this day, which was 1378, the low is 1340. So you did have a 30 handle Q pull-in. Not much, obviously. So anyway, Fed day, broke above the highs. Day after, little doji, inside day, didn't retrace too much, and now we've continued. Short term, I talked 1404 to 1407 as a spot to maybe take off some longs as things are extended. And then if you go to the monthly chart, you will see this zone will probably be a zone where we could pause. We're at 1404, which was right here. And then you have this area, which is 1440, which would definitely be a little painful for people rolling up their shorts. Excuse me. Anyway, so you go back to setups. We talked about the banks early on. We talked about JP Morgan, Goldman Sachs, Bank of America. And look at these 4-day moves in some of these banks. Let's get there right now. Bank of America, I want to start because that was my focus. Sorry, I have a little cough here. Excuse me. Here you go. Look at this move. Okay, I like tight channels. I like when they break above. This is why. You saw me long here around $8 or so as it percolated. When it pushed through on that Tuesday of 825, 830, pow, big 4-day move. I would say I sold the majority of my size on the 3rd day because I typically take my stuff off into the 3rd day because sometimes or rarely do you get a 4th. And we got a 4th and I was done with this by 11 o'clock and I don't care. A lot of guys I know started shorting it on the 3rd day and they have some big question marks in their head right there. If you go to the daily chart, it actually just powered through what I would have thought would have been some resistance here. And now you have this area, which is what? 1004 to, what is that, 1027? That's your next zone. This could see over 10 bucks. And I really wouldn't be buying it from 980 to 1020 on the first time getting there. I would take profits, and if you want to try and be cute, you want to try and be short, just be careful, because a lot of guys did that the last 2 days, and I've been trying to tell people not to. JP Morgan, strongest guy out there. This was your breakout. Here you go. Looks okay. Goldman Sachs. Goldman Sachs actually might have a nice pattern for next week. Goldman Sachs, you had the op-ed that made it a little bit weaker. It still held higher based on the pattern. Goldman Sachs likes to shake everyone around. But next week, this starts getting above 125. There's a setup there. Nice little flag pattern. Wells Fargo looks very similar to a JP Morgan. So these banks have had an unbelievable move. And, we've been talking about them well before. At first I thought it would be just like a January effect where they would bounce, and then it turned into a lot more than that, just like, the HGX or the home builders that I think to me are indicating a much, much, much better economy. Last time I drew this chart was right here, descending channel after a big move. What happens when descending channels break or resolve? Usually to the upside, and look what happened there. That's a nice move. A lot of those stocks within that group also had a nice move. So something for everyone there. As far as, some of the casino stocks, we had some like little cash flow trades too. Remember, we shorted around, 57, bought some back around 53.5. Yesterday, broke above a level, and it's consolidating. I think LVS has higher prices. Today, a little bit of a downside move considering where it just came from last week. I think you could buy some back around 56.20. It's okay. Win also, really nice move. Overall, this was the breakout we had with Kramer. Went to about 130. Retest buyback. So right here, some sideways action would be good. Caesar also started buying a few days back. This was my Bible breakout. It's consolidating again. Starts getting above this level of 1349. It could continue. There was some news that a secondary is coming, and it really didn't do much, so I'm staying long there. You can see that on my disclosures. Nice, timely trade. As far as like Apple, now at this particular point, it's flagging once again. Okay, it did not get into that gap. We now have a 3-day range to trade against right here. There was some nice two-way action in Apple. A lot of guys made money quickly short, and then once it couldn't pressure through this 3-day support into the gap, it had a nice bounce. So now on a micro level, here's your 3-day range. Okay, this is the high it couldn't get through 600. So now with some time, we'll see what develops here. Okay, as a short-term active trader, this is what you look at. You have today's high. So this is like the middle end of the channel. Here's the high end, here's the low end, and we'll see what takes place. It could definitely rest. If you look at the macro pattern, you'll see that it definitely could use some time considering it's well away from the 10-day moving average and the 20-day moving average, which it tested a few different times over the course of this run. So with that said, don't just have short in the brain, but don't just be looking to buy because you tested it here, you tested it there, but look how long it took during this move before it went back to the 10-day. So at this particular point, sideways action would be good. Let the 10-day catch up, and then we'll figure it out there. As far as Amazon, still not doing much, still in this lower range. I guess some guys got a little excited when it broke above this little range here, but still it's got to break really to start to change character and have some shorts cover. 188.38 is the level for the short term to potentially resolve to the upside. Stay tuned there. Netflix also, to me, looks as if it's trying to resolve this descending channel to the upside. I'm long some. I got shaken around a bit, but I did get back into it. Figured they would close it around 110. So next week, if they can get it above 111.71, will be my add-on buy price for a continuation. We all know that Netflix has been a great cash flow vehicle for us this year, starting from right here. And then when we were on Bloomberg, right around 80, I said 110. It went to 130. Then you have that outside day, which was also good from the short side. Traded through the previous high, came below. You could have got short, stop at the high of the day, and you're another 20 points in the money, depending on how you traded it. It all depends, and there was also some, obviously, micro moves along the way. Whatever. Baidu, still hanging around, still flopping around, still hard to deal with, but all in all, it's going sideways. It's still below this major downtrend. I know I tried some this day at 140, lost a little bit of money, big deal. And now I'll wait to see if it breaks below this, rising trend line, or it goes sideways a little bit more before it tries to break to the upside. Google's been acting better. It all depends on your time frame. Here is when it came out with earnings, when in the penalty box. You had your cost average buy if you're a macro investor versus here, and this was the 200-day at the time. Then you had your nice little cash flow trade when it went above. Remember that 591 to fill partial gap, 2-day move. And now it's going sideways. It's trying to nudge higher. I'm not long Google. Macro investors, I'm telling you, I think it gets above the highs at some point this year. It might take this quarter, next quarter. As a trader, though, this is very, very noisy. It's hard to deal with. So for me, I've been just avoiding it. If it starts acting better, kind of like when I got long here and I sold into this strength because it was ready to go on that weekly and monthly chart, I'll wait. We also had a nice little cash flow trade here, but that was what we were looking for. So now as an active trader, just avoiding it for now. I probably should have been back into it when it broke above this little range here, this inside range of this channel, but I missed it. I was probably doing other things. But anyway, it still looks good, and it's overall good for the market. As far as, they're also even like one-off trades. 2 days ago, I said, you know what? We're getting up there. Usually they go after the the drillers, not the drillers, I'm sorry, the shippers, your GNK, your EXM, your dries. So I bought dries. I'm like, okay, put it in my position bank, one of my 8 to 12 or whatever. And then all of a sudden it triggered. Nice move, right? This was the last time we bought it. I think I sold it around here, let it do its thing, consolidated, bought versus support, added on this trigger, and now it closed at 364. We'll see what happens. Probably prudent to take some trades off into the day 2, but look how many days it had last time. So it just shows you how, even though some of the little guys, pop up and could make you some money. Yesterday I talked about this one too, SIM, SIMG. Look at that. Guys, you remember when sales traders started talking about it over here, lost some money. That was when we started to correct, was out of it. Then yesterday I saw it perk back up, getting ready for this descending trend line, went back to it, and then pow, look at this move. The old red dog would have said, you know what, it got me here, it got me out, I'm done with this thing, I'm never looking at it again. But the new red dog that said, you know what, it's just not ready for it yet. It's not, the time wasn't right. It's not the fact that I traded it or it's not a good stock, it just wasn't ready. And then this 2-day move, it was ready. And look at it, pow, nice day. Good call by, not gonna say his name anyway, looking pretty good, 650, $7, why not? As far as the OAHs today, got some life finally. Remember I drew this yesterday. I think I might have drawn it in the recap. I was looking at it, I'm like, ooh, like it held the uptrend. Held the 50-day. I don't have it in here right now. Small little descending channel here. Broke above. So this could be back in play. And I do think that this high here will get taken out. But, it couldn't do it the first time going through, considering the size of the move. When you retrace, you refresh. You bring in dip buyers, gives you more energy, and then here you go. And now as far as oil is concerned, oil also could be back on the move, which also helps that group. All in all, you had a nice trade in the USOs when it broke this level. Remember, it peaked out on that day. They talked about the pipeline, whatever, etc. So here's a nice descending channel, okay, which is just a consolidation. It's just a little bit of a correction. Closed strong. I actually went long some oil today, and I think that if it gets going, there'll be a little bit of rotation from there, and you'll see the OHs do better with some of those stocks. You also saw some of the ags wake up today. CF looks okay. POT was somewhat strong. It's been, look at the size of this move today. Broke this lower pivot. So I want to talk about some laggards in a bull market, because obviously laggards are short candidates, and laggards should somewhat be ignored. But during a bull run, laggards with lower pivots sometimes become good trades because people need something to do. And POT has been always a bit of a good name. It's something that traders are used to. So this was a lower pivot. It cleared this area right here, so it turned into a good trade. And now we'll see what happens when it clears this area, and maybe it's back in play. Mosaic also gave a nice run at the beginning of the year. Tight range, so some would say it's lagging. It probably should break the lower end of the range, but it didn't. It broke to the upside. Just going to show you that there are some cute shorts you could have, like when it happened here, but there's very limited downside or downside follow through when you're in a strong tape. So today I had a little debate with somebody in Twitter sphere. Obviously this FCX doesn't look good. It's a laggard. It's below all the moving averages. A lot of people are sitting short. But if it were to trade through this little lower wedge pivot pattern, perhaps it gets back in play, because FCX is something that institutions like to own. It's, it's copper and gold, but also has copper, which is considered economic barometer besides gold. So this is something to be on the radar. It's really, I would say it's definitely a bear flag pattern. Okay, that's what people were arguing with me about. Like, here's your pole, okay, and then you have your little flag here. So typically you get continuation if it breaks, but in this type of market, you're not getting much more follow through to the downside. They're actually looking more for reasons to buy certain things. I don't know why I have these fancy lines coming in here, but kind of cool. So we'll see what happens. I didn't buy it today. I almost bought it. I think if you're long, it's okay. LinkedIn, it's been it's been a little choppy. It's still hovering by this little breakout range. I don't like that it sold off a little bit towards the end of the day. I think they wanted to pin it at 90, but they couldn't. So we'll see what happens. I'm still in tier 1. I'm not adding till it gets above 95. I still like these, the coffee stocks. Nice bull flag here in Dunkin' Donuts. This was the entry. Here is your nice continuation, flagging. As long as it stays above this 31.50. I think momentum is going to be strong, and then finally, if it gets above this 32.44, it'll continue. This is an infant. It's a baby. It's only been public for like 10 months. It's been under accumulation. It's starting to go. I think it can continue. You know, the leader, Starbucks, has been obviously, you know, unbelievable. Jill, I got to give you props. You know, she had an options profits right around here with a straight up buy, and I agreed with her. And look what's happened ever since. Very good stock for stock pickers also. You know, if you've been in this for a decade, you've been making a hell of a lot of money. Which also goes to one of my prior rants this week. When we made new highs, I was just like, this market is rewarding a lot of different types of market participants. You could be a 401k investor like my wife, who's 35 years old. She's been doing it for 6 years. She puts in 7%. She gets matched. She is making a good amount of money in the stock market, putting monthly money into a balanced 401k just using ETFs. You could be doing something for your kid who's 3 years old now, helping to pay for school. These are long-term plans. Every month you do it. When the market looks its worst, maybe you try and add a little bit more. That's if you don't approach the market technically and you don't want to pick stocks. Then you have the stock pickers who know how to find high growth situations, that know how to look for the technical strength, the fundamental strength, the IBD method. You have historic highs being made. So over the last decade, even more importantly this year, there's been stocks that could have paid you a ton of money to hold, not to trade, not to look for cash flow, to hold, and they were rewarded. And then you have momentum traders like myself who are able to be long for 2 months and trade in and out of positions, get short, get long, use the good book. Everyone's like, what's a good book? You know what? The good book is this. Look at a stock that you could have shorted within this move based on a chart pattern. That's Under Armour. Take a look at Under Armour, right? Under Armour had a really nice run. It was on the radar, you know, as far as being long. Okay, so you could have been long it. It broke above these highs here. There's your area, you know, to buy, your retest. And then what did Red Dog see? Red Dog saw a little Red Dog reversal, a little bitty Red Dog reversal right here, right? Broke above the high, closing the low. I took some home short. It opened flat to up. You could have added right here, and you just had a 3-day Q trade as an active trader. You could even be a bull in this market and find a cute short. I covered the majority of it yesterday. I didn't hold for today. I should have trailed it, but whatever. I take my trades. So it could have showed you could have made a little bit of money short also, even in this tape. So pick your poison. There's something for everyone in a lot of different spots. And Under Armour showed you a topping tail, gave you some follow through. That's all you can ask for from the good book. You know, and then if you follow the treasuries and bonds and you've been waiting for this big bond move, okay, well, here you go. You got it, guys. You had the nice trade from the Fed day. This is when it closed above 1970. Good book said take it home as it closed above this entire range. You got paid. And it's not really a blockbuster move thereafter, but still, it's moving okay. Okay, maybe it tries to test this gap where I would be buying more of. But this is why you use a tier system, guys. You know, here's your tier 1. You get to your tier 2. Maybe you get back to tier 1, which I'm at. I'm only in tier 1 now. So this way I could continue to hold it if it tries to fill this gap first. Or if it comes back and holds this gap, I'll get back to tier 2 for then what could be continuation. TLT on the opposite side. I drew this level for everybody, I think a few days back. Okay, this is when it broke below, nice short, came into this support. Look at this, guys. Doesn't this look a little symmetrical? Right, here's the low. This is your low at what? 109.82. Where did it go and hold? Oh, the low here is 110.20. So if you were short, why wouldn't you cover some into here? Just based on a move from 116 to almost 110, that's $6. That's a lot of money from a short-term standpoint. And if you were accumulating it short in here with a thesis, and you added here for the resolution of your thesis to the downside, you take some off and then you hold some. Maybe we get a retest. Who knows? Maybe they do try and retest this gap. If it doesn't fill the gap, you'll see extreme weakness. And if it does fill and retest this broken line, you could also reshort it. But what happens if it comes up and then holds and then starts breaking back above? Then all of a sudden, you know, this was just a trade, not a potential longer term move. So that's what I'm going to look to judge whether or not this bond sell-off's for real, is by the bounce back. If this trade is really more than just a trade and in longer term, I don't think that this thing or the TLT should ever get back above this 114.60. This is like it. Like I would say short term wise, if it's really weak, it doesn't get in the gap. If they want to shake the tree, it gets in the gap, but this should never close back above 114.60 if it's going to continue all the way down to lower prices. That's just my humble opinion. So anyway, to bring it all together, a lot happened this week. A lot of indices are closing at multi-month, multi-year highs. A lot of stocks are closing at multi-month, multi-year highs. There's been a lot to be happy about as a market participant. Yes, there is some talk about whether or not the policy is going to lead to a disaster in 6 months, a year to 3 years. As of right now, it's not. As of right now, the market's rewarding you for being long, looking for good patterns. And when that changes and we see some distribution days and we see they start to add up and we see institutional selling, I'll see it. I'll let you know. I'll go back down from 10, 12 long positions to 2, 3 to then net short, and we'll try and navigate it. Same way we tried to navigate it a week and a half ago when we broke the 10-day, and then we had to wait and see, and then we went right back involved. You're allowed to do that. But the worst thing is just not to admit you're wrong. Not to, I told you that story about the guy in the gym who was a broker who was afraid to talk to his clients because he doesn't want to admit that he's wrong, where he's going to lose his entire book because he's been short, he never covered, and he has an opinion of what should happen, and he's going to probably wind up covering in the next move up if we get that squeeze. But anyway, as a trader, you're allowed to admit you're wrong, and the only person you have to admit you're wrong to is yourself, not even clients. So once you get over your ego and you start taking accountability on what you're doing wrong and start really looking at yourself in the mirror and admitting to it, then you grow, then you make changes, and then you could approach the market with a better plan. And even if you're doing well, like a lot of guys have been doing well, don't get too excited. Don't let your highs get too high. Make sure you stay in the rhythm, keep your discipline, and look at what you've done to get where you are. So this way, you don't lose fact of what's going on and start having slippage. And if you're doing something well, you obviously could be doing it better. Every day I try and grow, I try and change, I try and increase my tier size, I try and hold longer, try and maybe take more positions, I look at different groups, I try and do things that could make me a better trader, and that takes a lot of work, it takes a lot of effort, and with that you can get rewarded. And for you guys, it's the same thing. So for you guys to be watching this on whatever time it is on a Friday, I do think that you're making the right steps in the right direction. If you're a subscriber, T3 Live, you're learning skill sets. If you've taken some of our education courses, I know they're not cheap, but again, one trade makes that back for you in a heartbeat. We have an active trader course, a momentum trader course, a fundamental course, all different courses based on what you want to get out of the market. And it could really help you moving along because it'll teach you about the things that we do here. It'll give you the rationale behind our strategy. So this way you could take more size, you could hold longer, and you could understand it. When you understand the strategy, you trust it, and you stay with it. If you just want to piggyback on the virtual trade floor because you see, oh, Scott bought dries, I have no idea why, but since he did it, he's a smart guy, or I think he's a smart guy, I'm just going to do it. You're never going to do it at the same conviction level that by understanding it. Same thing with LVS, same thing with any of these things. So the effort you put in will be the results you get out. You got to start somewhere, so make sure to make that step. It's a Friday, it's been a long week. Have a great weekend, enjoy yourself, enjoy your family. I've said this quote before, people don't really like it, but it's true. Live life, you're dead a long time, and enjoy yourself. Don't take things too seriously. Scott Rella, T3 Live, see you Monday morning.